Before we begin, please be advised that trading foreign exchange and financial products involves a high level of risk. This content is strictly for educational purposes and does not constitute financial advice. You are solely responsible for your own investment decisions. Welcome to this advanced analysis. Today we focus on Euro to US dollar on the daily chart ahead of the interest rate announcement. Price is reacting to key institutional levels like the 2026 PDH and PDL. This expansion anticipates imminent volatility. Liquidity above 1.2085 is our main target. On the 12-hour chart, we see a massive fair value gap between January 1898 and 1.1966. These inefficiencies act as magnets. Before the news, a retracement to balance the market is common. Interest rates will act as a catalyst to rapidly fill these liquidity gaps. In the 8-hour timeframe, price consolidates near the FVG's upper bound. Rejection wicks suggest technical resistance. The market typically clears highs and lows before its final direction. If rates favor the dollar, we will break violently toward the January PDL. We move to 4 hours under New York time. The Wall Street Open will drive price toward our zones of interest. A new FVG at 1.1917 creates confluence with the 12-hour level. If price respects this block during the session, we confirm the protection of recent lows. On the 1-hour chart, we identify BSL at 1.2025, where sellers' stop losses sit. Price will seek to capture this liquidity. Below, order blocks at 1.1796 provide support. Current compression anticipates an explosive expansion once the official figures are released. At 15 minutes, we see lower highs above the 12-hour FVG. This is an inducement for retail traders. As professionals, we recognize this as a pre-news sweep. With our roadmap clear, we now wait for the price reaction to the fundamental data. Moving to pound sterling to US dollar on the daily. The pound shows vertical expansion, leaving several PDLs from 2025 behind. Price is testing liquidity above the 1.3870 PDH. If rates strengthen the dollar, institutions will seek to mitigate the sell-side liquidity accumulated below. On the 12-hour chart, an FVG stands out between 1.3701 and 1.3773. Lower PDLs form a massive liquidity pool. If the dollar gains strength, we'll see an accelerated drop to clear these levels. As long as price remains below the upper FVG, our bearish bias holds. In 4 hours, consolidation shows a lack of conviction. This often precedes a stop hunt. The January PDL at 1.3643 is our zone of interest. We expect a quick move toward these lows to collect liquidity before the real market trend begins. On the 1-hour chart, BSL at 1.3831 acts as a macro fuel magnet. Price trades above the 12-hour FVG but shows internal weakness. We look for liquidity grabs at the extremes to validate continuation, targeting 1.3643 as a clear institutional objective. At 15 minutes, the narrative is clear: price is trapped at the FVG bound. The upper BSL remains intact for high-frequency algorithms. Don't be fooled by erratic moves. The true intention will be revealed when this range breaks with volume after the news. Analyzing S&P 500 futures on the daily. We are at all-time highs near 7,033. These levels act as psychological ceilings for profit-taking. Rate tightening could trigger a correction to the January PDLs, while a dovish stance could catapult the index higher. In 4 hours, we see institutional indecision near the 80H. A liquidity gap exists down to the 6,969 PDL. Indices typically perform sweeps before confirming a trend. If price doesn't consolidate above the New York PDH, a sweep of the lows becomes highly likely. On the 1-hour chart, blue arrows mark massive liquidity zones below the current price. This is the fuel the algorithm will seek if the announcement disappoints. In professional trading, we track unprotected liquidity as the market always seeks balance after an expansion. At 15 minutes, the range is extremely tight. This consolidation below highs indicates order accumulation. A fake bullish breakout is likely to induce buying before a deep correction toward our marked liquidity. With levels set, we are ready for volatility. The daily NASDAQ 100 shows a vertical and optimistic structure. We are trading near the ATH at 26,399. However, the lower liquidity pool at 25,833 is a structural magnet. NASDAQ reacts violently. Unexpected data will trigger a swift correction to balance the rally. On the 12-hour chart, the upper arrow shows buy-side liquidity already consumed. The focus now is the pending liquidity below toward 24,887. After capturing stops at the top, the algorithm will likely seek an aggressive reversal to mitigate unprotected buy orders. In 8 hours, the scale of risk is evident. We project a potential corrective move of over 1,600 points toward the 2025 lows. The current structure is fragile. If the fundamental catalyst breaks confidence, NASDAQ will perform a deep sweep to rebalance its value. In 4 hours, we identify critical order blocks at 25,738 and 25,582. These capital injection zones will act as technical support. If NASDAQ loses 25,582 with a solid body, the door to the January lows will be wide open for a major capitulation. On the 1-hour chart, the yellow line marks a massive accumulation of retail stops. Price is losing momentum at the 25,920 SSL. If this diagonal support breaks, we'll see a chain reaction toward the lower order blocks to clean up the excessive bullish extension. At 15 minutes, NASDAQ begins to pierce the liquidity trendline. The market is actively seeking the daily low at 26,250. This is our battlefield for interest rates. With supply and demand zones defined, we are ready to react to the volume. Daily Bitcoin is at a turning point after nearing 98,000. PDHs act as glass ceilings while significant liquidity remains unprotected at 87,196. A hawkish Fed could push BTC to sweep these lows before attempting another assault on the 100,000 mark. In 12 hours, BTC consolidates between 91,122 and 88,719. Wicks are constantly testing internal liquidity. This balance precedes an expansive move. If risk-off sentiment prevails, the target will be the 87,196 PDL. Watch for a close above 90,000 to invalidate the bearish thesis. In 8 hours, the accumulation of lower wicks suggests sell absorption. The 89,828 PDH is the resistance to beat. Bitcoin shows fractal volatility. This compression is the prelude to a massive expansion. If the announcement is favorable, we'll reclaim 91,122 quickly. In 4 hours, white circles show surgical liquidity sweeps. These stop hunts shake out weak hands before the real move. The algorithm seeks fuel near 85,978. Don't be fooled by fake breakouts, they are a warning of the true expansion coming. We close on the 1-hour chart with a price action masterclass. After the marked sweeps, price respects the purple mitigation block. With levels clear, we conclude the analysis. If you enjoyed this, subscribe, like, and comment. I answer everyone. Share the video and good luck.